You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live every Friday at 3 p.m. Central, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That funky tune means it's time once again for a little program we like to call around here, This Week in Futures Options. A program, of course, as the name implies, where we break down all of the fascinating, fantastic, scintillating, captivating activity that is catching our eye here in the world of futures options. That includes all the products you might think, and maybe a few you don't. So that's your crude, your gold, maybe your silver, soybeans, and whatever else catches our eye that particular week. We're always looking for fun, interesting, and exciting and exotic new products to feature for you guys here on the old program. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. If I'm out of breath a little bit, I've been running around the studio. I had to do a couple things right before the show started, so racing over here to the mic to get things on in time. But we're going now. We're good. And, of course, you can always find this content as well as all of our other great programs over there on the mothership, the flagship, theoptionsinsider.com. And, of course, while you're there, you can always mainline the audio as well, also via iTunes, TuneIn, Stitcher, pretty much wherever you like to find your favorite podcast. iHeartRadio just added to the lineup this week, so if you're an iHeartRadio user out there, well, we welcome you guys to the fold as well. No shortage of ways for you guys to stream, listen, download, and enjoy the program at your leisure. Hey, while you're listening, while you're streaming, while you're downloading, hey, we love to hear from you guys. Questions, comments, ideas, insights, products to discuss on the show, all that stuff. Hit us up. No shortage of ways to do that, including it's all baked into the mobile app as well. I'd like to mention at the top of the show, you can also join us live every Friday, 3 p.m. Central, 4 p.m. Eastern, right here via Mixlr, MIXLR, where we stream the show live every day. You can always get, or every week, I should say. You can get in on the chat room, join the rowdy kids in the class there, and see how the sausage is made live. And if you got a question about a particular product, you You want to hear us discuss it in real time? That's the place to do it. Mixlr.com, just search for us, Options Insider, on there. And of course, if you want to follow along with us and the magic of the show, not just live streaming, but also with the actual data for yourself, and maybe you want to generate reports throughout the week, all on your own, on whatever products we're talking about. You want to do your own products, that's fine too. Easiest place to do that is completely free, cmegroup.com/TWIO, This Week in Options. And once you're there, you can put up pretty much any product you want and dive into all the great data that we're going to talk about here on the program. And joining me on the program, as usual, my futures options compatriot, partner in crime, nemesis, call him what you will, Mr. Nick Howard, the founder of Bantix Technologies and the creator of a little futures options analytics platform we like to use around here quite a bit, called Quick Strike. And Nick, welcome back to the program. What secret undisclosed location are you beaming in from this week, sir? What exotic locale are you joining us from?
Oh, gosh. I am actually sitting at home at my dining room table very happily. So I've had a whirlwind this week. So I'm hopefully going to be on my game today. I'm a little edgy from a lack of sleep, but I'm ready to go.
Oh, I'm glad to hear it. You have joined us from a variety of exotic locales in the past, including, I believe, parking lots in the suburbs of Chicago, parking lots in Denver, parking lots out in Long Island. Looks like for a while there you might have had to join us from a baggage claim out there, I believe, in JFK, but you were able to get your flights all set up to make the that's how dedicated Nick is, listeners. He was going to beam in from the baggage claim over there at JFK. Thankfully, he did not have to do that, and he is able to join us live here. And hopefully a lot of you guys can join us live as well via Mixlr. We'd love to see you guys there as well. As we head into a long weekend, let's head right on into all things TWIFO-rific, TWIFO-licious. I don't know what we should call it, Nick. We'll come up with a term for it, a nice adjective for it. But let's kick things off in the product that has been really lighting it up yet again this week. It seems like this is just a gift that keeps on giving, Nick. It is, of course, WTI, a.k.a. the crude oil, a.k.a. Texas tea, a.k.a. call it what you will, the sticky stuff. It is moving yet again this week. You know, we were talking the last couple of weeks, Nick. The narrative out there in all things crude was, are we going to retrace the upside? Had the Saudis finally talked it up enough to the point where we were going to see that maybe threaten that 50 strike finally, you know, and we were starting to see a lot of activity on those 50 calls as a result. But we did remark on the last couple of shows, even though the upside on the futures was all moving upside the last couple of weeks, there was still a lot of open interest and a lot of volatility premium in those out-of-the-money puts. The put wing still where the action was, and it seems like so far that is indeed still the case, and it seems like that downside activity was a little bit prescient, as once again we see WTI kind of starting to retest the downside of the 40s handle, depending on where you look in the futures, right around the 45 level or so, off about 3.5 handles net on the week since the last time we all gathered around here together on the old TWIFO program. And of course, as you might expect, given that bit of a retracement down towards the richer, juicier puts, we saw implied vol coming up a little bit this week, up about 3.5 points, depending where you're looking on the term structure. So that's fairly rich, again, reflecting the fact that those puts were juicy. And when you're retracing down here, it's just a basic skew fact, listeners. When you're retracing down into the richer portion, you're probably going to see implied vol increase, all things staying the same. And that's exactly what we saw out there. We'll get into the quick skew developments out there and a little bit of interesting developments out there in quick skew land as well. Again, I mentioned vol up kind of across the board. Also, open interest up this week as well. Nearly 4%, or an additional about 75,000 contracts. That shows you how active and just how liquid WTI remains. It takes 75,000 contracts to really move the needle out there, and yet that's exactly what we saw again this week. Just a lot of activity, and in keeping with what we've been seeing for the past couple of weeks and past couple of shows, really, the action was pretty much once again predominantly dominated by front month. In this case, the October contract was where the action was to the tune of nearly 60% of all the paper we saw out there this week in WTI going up in that October contract. So again, not a lot of players going out long term here in WTI. It's all front month all the time pretty much, which is kind of interesting overall. Again, we were talking about those 50 strikes, and maybe Nick, you can get into this a little bit later too, because this kind of caught my eye. It was kind of interesting. Even though crude was largely retracing for the better part of the week this week, we did see yet again leading the charge this week. It was the OCC 50 calls. Those are our WTI hot option of the week with 37,000 contracts lighting it up this week. Very, very active calls. They weren't trading evenly throughout the week, though. We saw 10,000 about roughly go up on Wednesday, and another about 10,000 or so go up on Thursday. So 20,000 of that 37,000, roughly half coming just on Wednesday and Thursday alone. Volume again on that one contract, even though it was hot last week, up 50% from last week to this week. So a big jump out there in volume. It'd be interesting to look and note if perhaps those were people maybe capitulating a bit on that 50 strike, or they starting to say, wait a minute, we're retracing. If this 50 strike isn't happening anytime soon, I'm going to dump my holdings and maybe readjust to another strike. Or perhaps were people saying, hey, this is an opportunity to pile in. Crude is giving me yet another swing at the bat. If you're a crude bull and you haven't had a chance to dive in, you can't really complain. Crude's giving you a lot of opportunities at this point to really get in there. So maybe this is yet another. And maybe that's exactly what we're seeing. Maybe we are seeing people piling in to that 50 strike. Not to fear, the puts were also lighting it up again this week as well, to the tune of our old favorite, the OCC 40s, and the OCC 45 puts again also this week, lighting it up with about 28,000 contracts each out there. So fairly active again out there in the OCC contract month. Also the OCC 48 calls lighting it up this week as well with about 24,000. So a bit of a diverse paper flow out there this week, but still upside calls leading the charge net volume-wise out there. Interesting stuff. I don't think probably a lot of people would have expected that, but maybe, again, that is a sign that either the bulls are coming back in or perhaps a little bit of capitulation or maybe perhaps a bit of both. Nick, I know you like to pay attention to your quick skew, so perhaps we'll start there. Anything really catching your eye out there in quick skew land for WTI, as well as maybe broadly for the 10,000-foot perspective on WTI as well?
Yeah, I'll comment first on your mention of the 50 strike in October. Okay, so there was quite a bit of volume in there. Like you said, almost 37,000. But if you go and look at Mark, the number below the volume number each day is the increase or decrease in open interest for that day. So you'll notice it's all green. So there's a lot of openings in that strike. Same thing in the 48 strike as well. And people are still, I think, biased towards the upside a little bit on this because everybody's looking for output changes to sort of support a price that's higher than where we are right now. So people getting into the strike, and it could very well have been on the break. Vol was up a bit. But it could be, that from a raw premium standpoint, that 50 strike became a little bit more affordable, and they just kept piling in on that to try to get in on any kind of upside that might take place. As far as the skew, the quick skew, it looked like the puts got a little bit richer in relationship to the money, and the calls are a little bit cheaper. So that's why we see, if anybody's looking online at the TWIFO report, you're going to see negative numbers in that risk reversal column. Now, again, like I always say, I always preface this with, I am a product guy now. I'm not necessarily doing anything in the market, but to me, this would seem like a chance to try to sell some of this, any kind of bid you get in the downside, because I think the intent, at least from what you hear and what you're reading and what you're seeing, the intent is to prop up that price. So you might get a chance to sell some juicy stuff. If we, or maybe people even did this week, we could take a look and see specifically if there was any closing of those puts. I know I just was looking at the opening of the calls. I got to get my window open up here again. If you go look here, we have a closing of the 45 strike. So people were, you're going to get near the money or at the money, you're going to start closing those down. But the 40 strike had a net decrease in open interest. The 42 strike had a net decrease. So you could see a little bit of a capitulation or better yet, profit taking just on the break. We get the vol up across the board. So just feels like this is really sort of, it seems really pretty expensive right now, the puts to the calls, especially given we're seeing the volume numbers. And it's almost back to where it was, let's see, in the beginning of July, we were probably as wide as we have been in a while in terms of the relationship to puts to calls. Let me go back another year. So I want everybody to realize too, Mark, we like to be upfront on this program as well. Today I'm using the report like we wanted it to get used when we built it. So you can kind of come in here and maybe not be so in tune with what happened that week, but you can go and look and see all this information right quick and, get the information you need. So the puts are reaching premium levels that they haven't seen in a while, near their highs itself. So that's something to consider. They're well above their average over the year in terms of richness to the after-money. And the calls, they're about right where they've averaged over the last year as well. So, this might be a time, do some collars, get some premium, selling the puts and buying some upside. So that's what we're seeing, at least in the front. And then I did notice, I wanted to point a couple things out in the December contract. Mark, if you go out there and click on the 55 call, that was our big volume number in the December contract. That had almost 11,000 trade. But you'll see that there was lots of upside that was trading. We had 55, 50, 52, 60, 65, and even the 70 strike traded in the calls in the December contract. And the calls, looking at the put-call ratio, if you're following along with us on the report, the put-call ratio was 0.7. So you have calls were definitely more in fashion than the puts further out, or at least in the December contract, and that's the contract with the majority of the open interest. So sort of a even balance in the volume and the puts and the calls in the OCC. A little bias in the November, but again, not as much open interest there as there is in the OCC in December. And December, long term, just like we sort of talked about and what we're seeing in the news and some of the things that the people we follow on Twitter that are very good at this product, seems to think the bias is still towards the upside.
Yeah, that certainly seems to be the case. That is interesting to note. I haven't pointed that out on the show before, but that is worthy of mentioning. You discussed how when you get into the volume over there on the Quick Strike, and you guys can do this on the /TWIFO page yourself, you can see exactly when it is opening interest, which is kind of opening volume, which is kind of interesting. And again, that would add up to people reestablishing on the 50 strike out there in WTI, which I think a lot of people might be surprised at, again, given the sell-off, but it sounds like the bulls are out there. They like that 50 strike, and they're taking advantage of a retracement here, retreat in the futures to get those contracts for a little bit less juice. I don't think they were out there this week really blasting away hot and heavy on the 50 strike, given the fact that these things are nowhere near as rich as they were a week ago, but that could potentially be the case, but I really think this looks like bulls still repositioning. And also taking advantage of the fact we were just talking about. The puts are rich, the calls not so much. So if you are perhaps a bull, like Nick was saying, this could shape up pretty well for some bullish risk reversals out there. Selling the put, again, at a strike you like, so you don't complain when it gets put to you. And then, of course, buying a call on the upside. And hopefully that, depending on how you structure it, you can do that for a very low outlay, if not a credit. So that's definitely a more attractive way to do it than just coming in and loading up on those 50 calls out there. But interesting stuff, a little bit surprising stuff, I think, as well, from WTI. I think a lot of people were expecting puts to be the order of the day this past week, and certainly they have been, but not perhaps this week. Moving on, Nick, to the land of the magical fruit. We've been talking about this one a lot. This one has kind of vied with WTI for kind of our top-of-mind contract, of which, if you told me this when we started this show, I would have said, you're a crazy person. Soybeans versus WTI. We're going to talk WTI way more than the latter there, and it turns out it's been pretty close to even, because soybeans keep delivering, at a time when realized volatility in the equity marketplace is kind of hard to come by. The S&P 30-day realized volatility is about a 5. So that's almost about as low as it gets before it's pretty much just non-existent. In fact, just last week or so, a week before, they registered, I think, the lowest 21-day realized vol in the S&P in recent memory. So things are not exactly rocking and rolling out there. So if you need a place to get a little bit of activity, then perhaps the beans are where to look. Again, the future's off about 20 handles since we talked about them again last week. So a lot of action out there in the underlying, again, off about 1.5%, pretty much across the board out there. Once again, soybeans and a lot of agricultural products, they're trading their volume, their term structure dictated by the nature of the product, the crop rotation out there. So typically soybeans are out there in the NOVE contract. That was once again leading the charge with a little over 60% of the volume this week out there in the NOV contract. Open interest also fairly strong this week, up about 4% again this week. If you were wondering kind of what was leading the charge, it was kind of a bit of a combo dance out here with the NOV 900 puts and the NOV 1000 call, both tying for the lead with right about 18,000 contracts going up this week. So again, kind of equidistant with the futures right around 9.5, 950 out there. It's kind of equidistant put and call, a little bit of a risk reversal going up out there, kind of what you might expect, a little bit of equidistant paper out there. Overall, vol and skew up slightly this week, but nothing really crazy, notwithstanding a aberrant print out there, looks like in December. But aside from that, not a lot really from a vol perspective of lighting it up. Nick, anything catching your eye out there in soybeans, either from a quick skew or from an overall activity perspective?
No, I think the one thing to mention is that the actual volatility is sort of it's paying for what the volatility. So what the volatility is. So the market's moving, right? So if you're owning, you're keeping up with the pace. So the 20-day historical future is above the implied volatility at the money right now. So there's some trade out there. I guess the thing of note is in the OCC contract, right? We see like I always do, I like to look at the ratios on the volume and the ratios on the open interest. So last week, the ratios were a little bit below 1, like 10% below 1 on the OCC. And this week, it's almost even on the open interest. So I think that there's sort of a balancing act going on, like you mentioned, around this 950 strike. And if you look at the strikes that traded around, there wasn't a lot of extremes in the front contract. So, October is the last of the old crop options. November is the new crop option. I'm going to take a look at what the volume looked like on the NOV. And again, you don't see any real extreme strikes here. So you're seeing trading around the money, right? So you're not seeing anybody with any big bets or gambles or indications that things are going to go one way or another. And that's again, just taking a very practical look at things. I look at the put-call ratio, right? It's kind of steady in the first two contracts, which are the primarily traded contracts, right? So, and even the OCC isn't as, the OCC is the redheaded stepchild in comparison to the NOV, right? The NOV has 564,000 contracts of open interest, and the total in the beans that of what we're covering is 764,000. So a majority of the open interest there. So there's basically a trading around it. The skew is, it's the puts and the calls are weighing the same. And if we look at it from a quick skew standpoint, if we want to look at rich or cheapness, they're basically there's no richness, there's no cheapness. We got a pretty simple looking situation here in the vol curve. So you're seeing a nice smile is what you got. So no indication one way or another. I think there's trade there that's showing it. You see, we're down 14 handles on the week, but there was definitely trade within that week in terms of back and forth pricing. We started up, we hit a high of 973, and we traded down in below, I think our low was 938. So when you think about that, you got a 35 handle range. It's pretty good. You could trade around there. So, and that's what you're seeing in the volume. There's trade around the at the money. So I think the beans are we're going to be talking about the beans for a little bit longer, I guess.
Beans, the gift that keeps on giving. Who'd have thunk it, Nick, when we started this, that it would be it'd be all beans all the time, baby? But that's where the action is. We can't fight it, nor do we want to. We want to go where the hot action, the hot options are out there. And the hot option that has been lighting it up, not as much this week as it has last couple of weeks. This is the shiny stuff. This is gold. And once again, an interesting week. Net futures actually not delivering a net huge move this week, unched up to about 5 to a few handles, depending on where you're looking out there across the term structure. So it wasn't net futures movement that got us excited on the week. And also we saw vol eroding a little bit out there, often point or more, 1.5, depending, again, where you're looking out there in the term structure of gold. So vol kind of eroding after having getting bid up a little bit And also, the preponderance of the action, yet again, when it's kind of unsettled like it was this past week, tends to aggregate towards the front month, and it happened yet again with October leading the charge, just slightly over half of the paper, 55% going up out there in October. If you're wondering, hey, what was the strike du jour with the futures around the 13-quarter, 13.30 level? Well, it was the 13.5 calls in October. Once again, lighting it up with about 6,600 contracts out there. Number two, again, 1,300 puts. So again, kind of similar to some other products, we're seeing a nice little diversity of paper with equidistant almost calls and puts lighting it up. Pretty similar numbers, about 5,200 contracts going up in the AI OC 1,300 puts. So again, reflecting a little bit of symmetry out there, perhaps a little bit of concern or lack of complete bias one way or the other in terms of which way people think gold is going. And that's kind of been the way for a while. You know, we talked about this a few times, Nick, on the show here, that in terms of volatility skew and the vagaries therein, no product recently has been more, shall we say, fluid than gold. And gold this week kind of staying with that smile with a slight call bias. The calls are leading the charge, like I mentioned, but it's not a ton. So it's nowhere near like what we're seeing in the WTI, where the puts are clearly and demonstrably bid, or some of the other products. This one, very close. So we do see call biases emerge out there pretty strong in gold, and it tends to fade a bit as the gold bugs retreat a little bit and cooler, rational heads prevail. Then the puts get a little bit of love, and then it kind of balances out again. We're kind of in that little bit of balanced out phase right now. So interesting stuff out there. Nick, anything catching your eye, skew-wise or otherwise, out here in ye old shiny stuff this past week?
I think it's as you were talking, I was thinking maybe we should call it vacation skew or the vacation trade. So maybe there's just not enough people around that have an opinion.
Yeah, we certainly still have that this week. Maybe next week there won't be. We got the big holiday weekend coming up, so not a lot of size action going up this week.
Right. Maybe it's the size and it's the bets one way or another, right? So maybe we're just getting people who are sort of managing their book or trading around their book or looking for opportunities, and that's why we're not seeing much in terms of candidates for our crazy trade of the day, right? Because we really didn't see anything that was way out there. No, I mean, the skew is still sort of slightly bid to the calls here. Again, we're going to generally try to focus on the most liquid contract, which is the December contract out here in gold. There's been an absolute definite bias in the volume for the calls, and that's pretty much held for the last few weeks that we've chatted, and that's being displayed in the put call ratio for the open interest as well. So, vol off. We had a big spike today around 9 o'clock, and I'm not sure what number came out that, because it was after non-farm, so I don't know what came out at 9. I was in the air at the time, so I wasn't watching anything, but there was movement there, but this is a range trade. So you're going to see the same sort of thing trading around the money with not a lot of extremities being traded in terms of strike numbers, and I think just from what I've heard and been watching and listening, and you just said it may be that we have to get through Tuesday of next week, because people weren't around this week. Monday's off. They'll be coming back Tuesday, kind of getting their bearings again. Maybe look at this week in options on the CME Group website to see what happened last week and the week before, because you can look at up to 3 weeks in time. So I think you get some people kind of settling in again, and maybe we'll see some bias one way or another starting Tuesday or Wednesday next week.
Sounds good, sir. Speaking of bias, time to get your guys' bias onto the program with a little bit of our futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixler app or just search for Options Insider at Mixler.com. That's MIXLR.com.
All right, everybody, time for your questions here. Like the man said, we'll see how many we can get to today. Got some live ones coming in here, Nick, before we get to our prepared ones. Some people listening in here on our chatter a little bit ago about WTI. We were talking about how rich those puts are out there, and Chris Ciolis saying he thinks all that juice we were talking about in the WTI puts, he said this is strong hedging and perhaps a bullish indicator for WTI in my opinion. So I don't know. He's a bit of a contrarian. We've seen this for some time, though, out there in WTI. Nick, how long since we started the show and longer, the puts have been pretty much on top. Even when, WTI was much lower, we still saw a bid for the put. So maybe if you play the long game, it could have been. But these puts have been bid for, over a year now. It's kind of hard to see that as a huge contrarian. But again, I'm not a big contrarian indicator guy. What do you think about that potential? All these puts are juiced up. Therefore, you got to go load up on some 50 calls. Clearly, someone was thinking that this week because 50 calls were rocking and rolling. So maybe our friend Chris is slinging some size in WTI, Nick.
Yeah, I don't know if I have a good answer in terms of what I think of that being if I agree with that or not. Just because I'm not trading in the market so much, but I can, just looking at the quick skew here, we did tighten up at the beginning of the year a little bit, and that's as tight as it's been in a long time. So I think that and where were we trading back then? We were trading around the same price we are right now. So it's interesting that, like you just said, the skew has been bid for the puts regardless of it's been agnostic to what the underlying price is. Now we've been wider and we've been tighter, but we're back to as wide as we've been in a year. So he has a contrarian bent to him, and maybe he's right. It could be a very bullish indicator because we have puts are up above the 1 year average in terms of richness, and calls are well above or at their highs for the 1 year. So again, that's why there's no magic being like the soybeans. You just you're looking at the way the market's reacting, and you can see how things have done historically, and doesn't mean that things are going to necessarily go that way in the future. But this is as wide as the skew has been in a while. And you got to remember, when we talk about quick skew, we're saying how much is the call cheap, how rich or cheap is the call or the put to the at the money, and we're seeing a pretty wide width right now. In fact, I will take a snap of 1 year quick skew in the December contract and tweet it out right now as you go on to the next question.
I guess collectively here, we're not in the contrarian camp. Doesn't mean it's wrong. Clearly, people are liking themselves some calls this week, so you could be onto something there, Chris. But that's an indicator that's been rearing its ugly head for over a year now. So you could have pulled that trigger many times if you were so inclined out there. But again, if you like it, it is favorable for some bullish risk reversals. So bear that in mind as you're looking. Here's a specific one for you, Nick. This comes from DLK79, and he or she writes, in this week in Futures Option 17, you discussed the soybean skew coming back from the recent extremes and a trade that was put on 10 to 12 weeks ago to attempt to profit from this. Was this strategy discussed in a previous episode when it was first put on? If so, do you know which episode specifically? I'm going through some of the earlier episodes, but I've yet to find it. It's a good question. This goes back a little bit, Nick, when you and I were talking initially about just how rich that soybean skew was. As we recall, it was kind of the inverse of what we're seeing in WTI right now, where the calls were very bid, the puts not so much, so it was attractive the other way. It was for bearish risk reversals, aka collars, that were really where the action was. So if you were a long futures holder, you could buy fairly tight protection, fairly near out of the money puts, and then turn around and sell relatively far out of the money calls, and probably wind up doing that for even money, if not a little bit of a credit, depending on how you structured it. So that was very attractive for people who wanted to set up collars and be long the future out there in soybeans. As we said recently, as you point out in your question here, we've since said that shape has kind of diminished. It's not really the juicy setup that it once was from a collar trading perspective. And Nick, I did a little bit of research, and maybe you have some thoughts on this as well, but I went back and looked, and I do believe that was episode 4 where you made those paper trading tips. It was actually from May 20th, and the title of that episode was, I believe, A Rude Awakening in Soybeans. So go check out that episode. You can, of course, find it at theoptionsinsider.com or in iTunes or wherever you get the show. Like I mentioned, iHeartRadio, wherever else you get it. You can't get the archives on Mixler. That's just the live stream, but you can get it on demand pretty much anywhere else you find our stuff. And if you look in the notes here, you'll see paper trading tips for the soybean market in the show notes there. I don't know, Nick, do you recall the exact strikes you were talking about there, and anything else you want to add here for our friend DLK79, who's clearly paying attention to your risk reversals out there in soybeans?
Oh, you got to love that somebody's actually looking at the stuff. I think on episode 4, we did PDFs of the trades, and we might have even put links up there. I did look, and I remember we talked about it last week too. Last week, the November trade was still in the money. This week it got hammered. So that just shows you that if you put it on, you gotta watch for your switch point. And over the course of the week, I think it went up from up $600 to down $1,000 today. The last time I looked at it. So what we got to do is if we continue to do this, we'll take snaps instead of putting the link out. We'll always put the link out there because that link will let you go directly into Quick Strike and see where we put that trade on and what the value of it is right now. So you'll be able to see your P&L, but we'll also take snaps on a week by week basis, or we'll be sure to do that so we could see how that trade is fared. And what I'll do is I'll go back and I'll load that up, and what we could see the history of that trade's premium, so we could, over the course, and we'll be able to match it up with the dates. We'll be able to see where it was profitable, where it started to come back, and then maybe for the people out there, you can go look and see what the market was doing, what the vol skew looked like, that type of thing. But yeah, so that did take advantage. We flipped since then. We basically took all of that out, and we've moved quite a bit in the future. So I will. That link should still work. If you click on that link, you'll see that it is a loser now. But what I'll try to do is I'll try to tweet what the history of that premium looked like, so you can see that there were good points in that last however many weeks. How many weeks is that now? We did it in May.
Did it in May 20th, yeah. I believe. Yes.
Right. But we had 2 trades roll off because we did a contract that expired, and unfortunately, I don't recall. I know that we had a period where those are good. We had a period where we were eating a bit on those, but this one, I know that when we had the movement, we weathered the movement and had some good P&L. I know today it's not a good trade from looking at it, but that's a trade that's been on 5 months. So how many people are holding the trade for 5 months? Not necessarily. So, but I'll work to get that out there, and really appreciate you guys keeping an eye on that and taking a look. And just for the record, you can go out there and build your own trades if you register for the free version on the CME Group website. And I'm always pointing everybody to the free first, because you got to find out whether you like a tool first before you're gonna want to go into the next level of it. But if you go cmegroup.com/quickstrike, no C in the Quick Strike, you'll be able to log into your Essentials account or register for Essentials, and there is a trade builder tool. You can't save anything on that version, but you can build it and see what the P&L is, and you could, maybe print that off, and next time you can come back and take a look at it again and print it off again. So you'll be able to track it that way if you want to stay within that version yourself. So,
all right, Mr. Nick, we got time for one more here. We got a quick one from Neal. He just wants to know, what's up with silver? Very succinct. I like the succinct questions. What is up with silver? Let's check it out. Courtesy of cmegroup.com/TWIFO. Neal here, Neal Velasco, not happy with just the gold. He wants the other shiny stuff too. And it wasn't really a rockin' and rollin' week for silver. The future's up slightly, not even a point this week, so not really much to write home about from an underlying perspective. Vol coming off a little bit, depending on where you're looking. I'm not looking front month, because front month's not really vol anymore, but depending on a little bit farther out, it can be off a half a point to a point, depending on where you're looking. On the futures, once again, about a little over half of the volume coming in the front month, which is October out there in silver, with about 54% of the paper, and open interest up about 4% this week as well. That's about 4,000 contracts to 3,500 contracts or so. Again, gives you an indication of just how much paper silver does. Nowhere near as much as a WTI or even a gold. Total we're seeing this week about let's see, the 18 The 18 puts is where the action was this past week, lighting it up, leading the charge, listeners, with a whopping 838 contracts this week. So that should give you some indication of exactly how much paper is going up out here in silver. The 20s, the OCC 20s, and the OCC 18 half puts also coming in pretty much tying for number 2 with about 750, a little more, a little less contracts going up out there as well. Also, OCC 17 half puts, so about 750 out there. So a little bit of interest there overall from a action perspective, but again, silver not exactly the most active of products out there. So skew off a little bit out here this week, and if I could just get my skew tools coming up. My system's slow today for whatever reason, Nick. I could tell you exactly what's going on out there from a broad skew perspective. I think instead, while I'm trying to figure this out, Nick, I'll let you have at it with your thoughts, anything that's catching your eye out here in silver, as well as some quick skew notes while I try to pull up here the term structure skew.
Not much, like you said. It's not a lot of volume going on out there. And again, if we're going to be slow in the more active commodities, we're definitely going to be slow in the silver. I think the thing to keep in mind there, if you are watching it, and in all likelihood you're watching the gold as well. We started to talk a little bit about either last week or the week before the ratio between the prices of silver and gold. Today it's come in gold. Gold is a little cheaper in comparison to the silver from a ratio standpoint. So as you're watching the price movements, I think maybe as we start to see that ratio come back towards where it might be worth buying one or selling the other, we did that analysis a little bit, and we're going to try to put something we call the golden ratio out there, where we plot the front month silver versus the front month gold, so you can see how it's looked historically, and maybe try to look at that and play that as a spread as well. But until we get some good activity in the bigger shiny contract, we're not going to see too much down there.
Yep. So that's pretty much it for good old silver. Unfortunately, Neal, I think it was not a heck of a lot to report out there. Maybe next week we'll have a little more for you. All right, that music means we've come to the end of yet another epic journey through the world of all things futures options. Started off in the realm of Texas tea, talking all things crude, and how the puts are still leading the charge, even though OCC 50 is the hot strike. So put that in your pipe and smoke it if you're a contrarian out there. A lot of people are, including some of our listeners apparently. So maybe that's the trigger you finally need to pull the trigger up there and get your bullish action on. Or maybe you're one of these put lovers and you want to load up, despite the fact that they are extremely juicy. Soybeans selling off yet again, though not enough to really cause any major havoc out there. And the no 900 puts and 1,000 calls kind of lighten it up there respectively for this past week. Gold also not a heck of a lot of movement in the old futures this past week, and not a heck of a lot of movement really in much of the other parts of the product as well. 13 half calls leading it out there with about 6,600 contracts this past week. And vol coming off a little bit this week as well in gold, so that's worthy of note. Unfortunately, not much worthy of note in silver at all. Not a lot of volume, not a lot of skew change or volatility change up there. We did talk about it a few episodes back. Silver had that nice resurgence. This week, not so much, but we'll keep it on the radar there, Neal. So if it pops up again, we'll make sure to let you know. We love you guys writing in with your questions, your comments. Keep them coming. Ask us about our trades. Ask us about products. If you have a product you want us to talk about, could be as simple as concise as Neal, or a lot more detailed, whatever floats your boat. Hit us up. We love to hear from you guys, and hopefully you can join us every Friday at 3 p.m. Central, 4 p.m. Eastern for the live stream over there in Mixlr. And before we go, Mr. Nick, for this long holiday weekend here in the States, what's cooking? What's coming down the pike in the land of all things quick strike?
Okay, well, I just tweeted out kind of a first look at the benchmark tool that we're going to have out there. So we're going to have a heated benchmark matrix that's going to have it's going to show you what what the markets are looking like across the whole set of benchmarks at the CME group, and you could also heat up the individual columns, which are the different asset classes. So if you're listening, go take a look at the feed, and you'll see that. Maybe Mark will retweet that as well. So what's coming down? New reports. We're trying to do some more studies that look at futures range versus volatility, that type of thing. So just keep an eye on it. There's going to be the open interest heat map is going to be getting released on September 12th over on the CME Group website. That's a freebie, and I think you're really going to like that as well. So as we continue to develop things, we'll keep putting some stuff out there for free, some stuff in the premium version, but I think you're going to see more and more stuff out there for free. So you should be pretty satisfied with that. And then to add on to what Mark was saying, if you guys out there have any trades that you'd like us to try to put on and track, why don't you let Mark know? We can put them up there. We'll create them in Quick Strike. We'll get the link out there, and then this way you can have access to that, even on days that the show is not on. So you can go in there and play with that trade and look at it and see what you think. So I think that would be sort of a fun activity in between shows. But Mark, thanks again. Had a good time today.
All right, everybody. Thanks. Well, Nick, I had a great time. I always have a great time chatting all things futures options with you. That's going to conclude this episode. It also concludes our broadcast week here on the old Options Insider Radio Network. Thanks for all of you who could join us this week live. If you join us after the fact, we love you guys too. We love our on-demand listeners. We know you guys are the lion's share out there. Only the super hardcore who could make it get away from their desk for a little bit or maybe tune in on their device can join us live. But we love all you guys equally, and we'll see you next week for more of This Week in Futures Options.
This Week in Futures Options is brought to you by Quick Strike, options pricing and analysis software. Quick Strike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. Quick Strike has you covered, with market data reports ranging from open interest to the term structure of volatility. Quick Strike is the perfect addition to your trading toolkit. Learn more about Quick Strike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.